Welcome back. I'm Pratap here. Today is 15th April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. Even I kept all the videos in a playlist, Supply Demand Zone Price Action course at our channel. Even I have provided the link to that playlist in this YouTube video description. So from the description, click the link, you will get into this page and then scroll down to the bottom of this page. Here starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. So yesterday we identified 1, 2, 3, 4, 5 high liquidity zones from a daily time frame and 75 minutes time frame. So out of these 5, 3 stocks we got the trades. We got 4 trades from 3 stocks. And out of these 4, 3 are stopped out. You know the reasons, because of the overall global scenario and the fears. In today's market situation is not good. But still we got a excellent trade from ASIANPAINT's bear trap, which is below 75 minutes high liquidity zone. And there is several other reasons for the success of this bear trap. That also we will discuss. It's a very interesting analysis. First, let us look into this stock. This is a 75 minutes high liquidity demand zone. We have a drop, 2 base candles and a rally candle. This is a 75 minute zone. And this 75 minute zone is fine tuned with 15 minute zone. If you look into that, we have 2 15 minute zones here. Let me expand, you will get clarity. Zoom in. See here we have a drop, base, rally. This is a 75 minute zone. And another one is a drop, base, rally. Many of you I know will object to this leg out candle is not very strong, you may say. That's true. But this is at the in between medium size and large size. So that's why I have given priority to this. The reason is there is a big move after that. Because of that move, I have given preference to this. If you fine tune any lower time frame zones, and if you have a good 5 minute zone, definitely you can accept. Otherwise, anyway, this zone will be rejected. See, this is the way you need to understand sometimes. You should not say that, okay, this I am not convincing with this leg out is very great or it is not very large. See, they are at the basic level when you are learning the concepts, all the rules you are learning, the 50% body should be there for less than 50% body should be there for the base candle, and medium size leg candle more than 75% body should be there. These are all the rules you are learning, right? All these rules at the beginning stage you should follow them because you are a beginner, you are learning. That is your starting level. Once your experience grows, you should be in a position to take some decisions where you need to compromise and draw the zones. Maybe initial stage at the time of building your experience, definitely some of you people might struggle. I agree. But over a period of time, you will understand the price structures. That's why from the beginning, always I say, understanding the price structures is very, very important. If you are properly understanding these price structures, you get the acceptance to take deviations from the rules you have earlier learned. You should not take deviations every time. There are certain places. See here, I have drawn not for confirming. I have drawn if there is any inside, if there is any 5 minutes order flow, then only I want to accept this drop base rally. Otherwise, I just don't, I want to reject this. I know that this zone will be violated otherwise. You hope you got, some of you people are struggling and you are saying like, because always you are very keen to about the fundamentals you learn. You don't want to deviate from them. That's why, that is the reason behind the struggle. All the rules you learned, they are all at the beginning, starting stage. That is a foundation blocks to you. After that, once your experience grows, okay, this is the place I can accept. Okay, this is a looking a medium size candle or maybe little bigger than the medium size candle. Anyway, there is a move, big move after that. See here, there is a big move. So for that I want to convince and let me accept this as a drop base rally. This is how you have to understand. But still I am not saying I am going to accept this. If I find a strong order flow inside, then only I want to accept. That is what I am telling you. Please observe that point. So, see, all these years, from my experience, I understood there are certain places you need to take the deviations. That experience now you people should get. That's why every day I am explaining all the zones. So that I want to share my experience with you people. So now let's go to the 55 minutes time frame. Let us see whether really this is a valid zone or not. So here you have a drop, you have two base candles and then a rally candle. See, this is inside the 15-minute zone. We have a drop, two base candles and a rally candle. So definitely this is a convincing candle. And further price is moved. This is the way you drawn. And see what happened after that. See, prices came here, picked up the orders and see the move. Because it is a tested zone, you can't accept a trade here. Because what is our rule? I don't know how many of you looked into HLQ trade strategy. Yesterday I have released that video. Because some of you might be thinking, Saturday only you get the video, you might have ignored yesterday. Yesterday HLQ strategy video I have explained with two other videos, that is examples, supporting examples. So total 3 videos I have released yesterday. That is lesson 21.3, lesson 21.3.1, lesson 21.3.2, lesson 21.3.2, I mean 3 videos I have released. Please go through them. There I clearly explained this HLQ strategy. If anybody is not aware of HLQ strategy steps clearly, please go through that video. I'm sure many of you, some of you are not aware. Some of you are already seen. Some of you are yet to see that video is released. But I updated. Because every day a lot of videos we are updating. Some of you are just ignoring. The previously released videos, you are not really looking to them seriously. Just spend 1 or 2 minutes, not more than that. So that what kind of videos you are releasing every day, you will understand. See how it picked up the orders from this zone. See the huge rejection. So a lot of order flow. Anyway, the prices went more deep inside, consumed the order flow. Definitely we cannot plan the trade. As I explained in our HLQ strategy video, the zone should be a fresh zone. This is no more a fresh. We cannot accept a trade. See today what happened. This zone is violated with gap down. First of all, you didn't get a chance to place an order also. Because market opened with gap down. When it is opened with gap down, this zone is gone easily. One of the reasons why it is gone easily, because order flow has been consumed more deep inside earlier. So that is the reason why. Let me delete this now. Just I want to show you I have drawn. Now we have only one more valid one. Here you see, we have drawn. We have a drop candle, 2 base candles, rally, follow through candles. So you got a very good zone here. Drop base rally. This is the 5 minutes fine-tuned zone and it is a fresh zone. Definitely we can plan a trade. No doubt in that. But what happened today? Easily this zone is, actually it is not easily. If you look into 1 minute, you will understand. Already there was some order flow in that zone, but not good enough to handle the supply. Today's supply is very strong in the morning session because of the global scenarios, the news you might have heard about some wars in the Middle East. Because of all these reasons, a lot of fears, even some of our members also kept the messages. What happens to tomorrow's market? Anything can happen. See, always you should plan your trades. Maybe if it is stopped out, okay, you will exit. If you get a trade opportunity, you will take that opportunity and you will get profit. With fear, if you are not taking any trades, so anyway you need to wait until the market starts, because sometimes what happens with gap down, prices will go below the zones and you get to use losses. Once after prices entered into the zone only, you have to plan the trade. Intraday traders keeping pre-market orders is not advisable. Intraday traders, remember, this is what happens. See how with gap down came today. So this is a 1 minute zone. The prices came and maybe moved up, again came down from this zone, and after that ultimately this is came down because it is pierced here. Next candle completely easily went, but below there is a bear trap. Because this zone is violated, your stop losses would have been triggered, and institutions just below, they are waiting. They are waiting for your short orders, because earlier you took a long order, it hit the stop loss, now you go for a short order to close your trade. All our short orders are captured by the institutions. And all our short orders are nothing but bears. Selling means bears, right? All these bears, whoever stop loss, because of the stop loss exited, institutions got a very good liquidity here. They captured all the liquidity in this zone, and see after that how the prices were pushed up and finally reached the 15 minutes target. See here, this is the 15 minutes target. So two things happened here. The first thing is your orders are stopped out. Definitely you need to exit. But again you need to place a long order here. I've been telling for the last 6 months, because this bull and bear traps we discussed 6 months back. After that, every time, monthly, maybe 2 times or 3 times, we are talking about bull or bear traps. In the next, maybe after next lesson, I'll be explaining about this bull and bear traps in our training lessons. If I get a time during this week, I will release one more training lesson that is based on rejections and aggressive trades. If I can able to do that in the middle of the week, in the next weekend we can talk about bull and bear traps. Otherwise we need to wait for one more week. Okay, anyway, we have already old lessons where I talked about bull and bear traps. You can search in our YouTube channel. But the point, see what many people will do, because this zone is trapped, and simply we keep quiet. But just below there is an opportunity, we will miss that. And also there are other strong reasons why this bear trap is going to work. Because I have 100% confidence that this bear trap gives a very good result. I have 100% confidence. You people check how many of you exactly did analysis the way how I am doing. Excuse me. I don't know how many of you noticed this 75 minutes zone. This 75 minutes high liquidity zone. This is a drop, 2 base candles and rally. This is actually having a zone confluence with daily high liquidity demand zone. There is a daily high liquidity demand zone. Previously we discussed about this daily high liquidity demand zone few days back. We also got a trade on that day. 29th February we got the trade. Probably on 27th February HLQ zone analysis, this stock would have been listed. 27th February. In 28th February HLQ analysis, I would have explained you about this high liquidity, daily high liquidity zone. Let me go to the daily time frame. That day you might have drawn this high liquidity zone on your charts. If you would have drawn this zone on your charts, still it might be there. See, why it is there in my chart? Because earlier in one of the HLQ analysis videos, this zone is listed. That's why I have drawn this zone. It is there in my chart, means it also might be there in your charts. Because I am expecting every time after explaining how to draw the high liquidity zone, exactly the same way, you are also drawing these zones on your charts. What is the advantage of drawing? Two advantages you have. First advantage is you are learning, educational point of view. And the second advantage, next time again prices retraces, sometimes you may get opportunities. Whatever I have drawn the zones might be helping you in providing you the trading opportunities. Both these reasons are very, very important. So if you would have drawn this daily high liquidity zone, today you might have noticed this 75 minutes high liquidity zone is overlapped with the daily zone which we have drawn earlier. What is this daily zone? This is a rally. 6 base candles, 5 base candles, and again a rally candle. This is a leg candle. Leg candle is part of the base because there were earlier base candles are there. Okay. This is what our software identified, this zone. So this is the high liquidity zones we have drawn yesterday. For this high liquidity zone, this is the bear trap. For this high liquidity zone, this is the bear trap. But why this bear trap is such a strong, even though today's market is not good at all in the morning session? The reason is, this is not only a bear trap, this 5-minute zone, this is also a fine-tuned, fresh 5-minute zone in daily high liquidity zone. This is a daily zone. So that means this zone should be there inside a 15-minute zone. That 15-minute zone should be there inside a 75-minute zone. That 75-minute zone is part of this daily high liquidity zone. And moreover, the 75-minute zone, which is part of this fine-tuned 5-minute zone, is again having a confluence with this 75-minute zone. If two zones overlap with each other on the same time frame, that is called LOTL. Let me show you LOTL 75 minutes that is overlapped with this high liquidity 75 minutes. So now I am changing the time frame to 75 minutes. So this is the one we are talking about. See here we have a rally, 2 base candles, and again a rally candle. Let me draw the 75-minute zone here. Let me change the color. Rally, base, rally is a 75-minute zone. And this 75-minute zone is overlapped with another high liquidity 75-minute zone. Drop, 2 base candles and rally. This is what our software has identified in our yesterday's report, in our previous report. This 75 is overlapped with, there is another 75 minutes. Maybe this 75 also may be high liquidity zone. See, several times prices entered and coming out of this zone. And moreover, it is overlapped also. Another 75. Okay, inside this 75 minutes, I identified a fresh 15-minute zone. So I am changing the time frame to 15 minutes time frame. See here. We have a drop base rally with a hidden gap. So this is another strong reason. There is a pro gap. Definitely some order flow will be there. By the time the order flow consumed and enters into this zone, definitely this zone will give good result. So this is a 15-minute zone. Drop base rally is a 15-minute zone. Inside this 15-minute zone, now let me go to the 5 minutes time frame. See here, in this 5 minutes time frame, we have a drop, base and a rally candle and follow through candle. See, a very big move. And this is looking like an excellent structure. Price structure is excellent, very neat, clean. And we have pro gap area is there, professional pro gap. We have definitely some institutional orders will be there. If prices are entering into this, definitely majority of the supply would have been consumed. See, it is a fresh zone. 15 minutes is a fresh zone. And moreover, before entering into this one, the one that is listed by our software, this fine-tuned 5-minute zone, definitely it would have consumed some supply. It is violated, but it would have consumed some supply. Below that pro gap area, some more supply it might have consumed. And then entered into this zone, fine-tuned zone. And this fine-tuned zone is also acting as a bull trap to this 75 minutes high liquidity zone. When you have so many strong reasons, how can we miss a trade from this zone? We cannot miss the trade. Definitely we should accept this risk. You should have such kind of understanding. Why I need to accept, even though today's market situation is not good in the morning session. At some point of time, market will again change the direction. That is what you have to understand. And to be honest, today's market is not crashed at all. It was a down because of selling pressure. And many of the institutions might have cancelled their orders from these zones. Not only in this stock, in some other stocks also. Because they want to wait. They don't want to take a risk. They might have cancelled their orders from these zones. Because they cancelled the orders, easily some of these zones are violated. It doesn't mean they will cancel their orders in all the zones. They have their own calculations. And understanding their calculations is not easy for us. But some places definitely we can understand how institutions will think. This is one such kind of area. Mostly bull traps also they will cancel sometimes. But this particular bull trap, this is a bear trap, So in this particular bear trap, why they didn't cancel, we have other strong reasons. That is what we discussed. This is not only a bear trap, this is also a fine-tuned 5 minutes demand zone. That is also we should understand. This is a fine-tuned 5 minutes demand zone from daily time frame. Not 75 minutes time frame, daily time frame. Daily time frame fine-tuned 5 minute zone is much stronger than 75 minutes fine-tuned zone. This is what you should understand. But anyway, this 75 minutes is also part of daily because it is overlapped with daily. So this is also a fine-tuned 5 minute zone from daily zone only. Inside this daily high liquidity, we have another 75 minutes high liquidity, which is recognized by our software near the zone. But whatever it is, because it is violated, definitely the next one will save the day. This is what you have to understand. If one fine-tuned zone is violated, there are higher chances the second fine-tuned zone will be working. And moreover, the second 5 minute zone is from another 75 minute zone. Not the same 75 minutes zone. See, all these calculations should run in your mind. Then only you will get confidence about this particular zone. Otherwise, how you trust that zone? You have to do all these calculations. You should also try to understand how institutions may think, how they will think. You can't understand them every time, but sometimes definitely we can read their minds. This example is one such kind of example. So those who would have taken a trade in this bear trap, today we would have got a very good money because it reached the 15 minutes target. Okay, some of you may not be having patience to wait until here because price, a lot of time see the price action in this area, within this area. Maybe some of you might have exited here, still you would have got good profit. Because previously we discussed, maybe some people might have exited here because there is a gap. Before entering into the gap, might have exited. This is the first exit opportunity. The second exit opportunity is here because prices are moving here. Somewhere here you draw a horizontal line, you will exit. But finally it reached. See, whatever we are discussing, what is the maximum profit our HLQ zone has given? That is what we are going to discuss. There is no rule that you will be waiting till this time. This is the opportunity our high liquidity zone has given today. From this opportunity, how much you grabbed, that all depends on the individuals. That is what you need to understand. The one I am discussing here is not about my trades or not about your trades. We are discussing about the behavior of this high liquidity zone and how much opportunity this high liquidity zone is provided to us. From this opportunity, how much you grabbed, that is a different story. But today it provided you an opportunity until its 15-minute zone. And this is the way Asian Paints has given 7,850 rupees profit, which is 7.8% ROI. This is a 5 minutes bear trap below 75 minutes high liquidity demand zone. This is not only 5 minutes bear trap, this is also a fine-tuned 5 minutes zone from a daily high liquidity demand zone. That point also you should remember. But anyway, I am capturing the data from our high liquidity software, whatever it is provided from that point of view. So I have written 5 minutes bear trap. But you should remember, this is not only a bear trap, it is also a fine-tuned 5 minutes high liquidity zone from the daily zone. So all these reasons are supported for the success of this particular bear trap for our 75 minutes high liquidity zone. And because this zone is violated, which one? The fine-tuned 5 minutes. Definitely you would have placed your order. Before placing your order on the bear trap, you would have placed your order here and which is stopped out. And the stopped out Asian Paints has given 650 rupees loss. It's a minimal loss. It is only 0.06% negative ROI it has given based on one futures margin cost. Because Asian Paints margin cost is just around 1 lakh, a little over, a very 1 lakh 500 rupees, something like that. So for 1 lakh rupees, it has given 7.8% ROI. So this is about Asian Paints. So hope you understand the importance of these bear traps or bull traps we've been discussing several times. Because some of you people are having already familiarity because you've been listening my videos for the last 6 months. But some people are started listening for the last 2 months or 1 month. So for those people it is going to be a learning to understand the importance of these traps. Okay, apart from Asian Paints, what else? Today we got the trades but stopped out. So the next one is LIC Housing Finance. It is a 75 minutes high liquidity zone. So this is a leg-in candle, ERC candle, drop candle, base candle and a rally candle. So this is a good 75 minute zone, no doubt in that. So in that again we fine-tuned with 15 minutes time frame. This is a ERC, failed ERC candle you can consider. Not really failed ERC, but okay. Because minimum body is there in a ERC candle. So you can use this as a leg-in. And you have a base and a rally candle. And inside we identified a 5-minute zone. 2 5-minute zones actually. This is a rally, base, rally. And again picked up the orders. Prices moved more inside and again further moved up. So you can't plan a trade in this because it is already tested more deep inside till the proximal. There is one more drop base rally. And here today prices opened with a gap down and then the zone is violated. And if you look into 1 minute's time frame, prices opened here. After that it has given some push, but it is not good enough to reach up to this fine-tuned area, 15 minutes level. After that again it came down because of today's morning supply pressure. The zone is easily violated. Even if you would have planned any trade in the 5 minutes zone below this, still that is also violated. Let me show you. Somewhere here you might be having a trap. But this is 1 minute, sorry. Let me go to the 5 minutes time frame. You might be having a trap here. But today this is did not work. Easily even this trap is also violated. If anybody would have placed your bear trap orders in this zone, still you would have got a loss. But you have to accept sometimes. You cannot compare with the Asian Bank's bear trap. The reason is Asian Bank bear trap, there are several reasons for its success. Even though today's market is very bearish in the morning session because of fears in the market, due to the market, due to the global situation, still maybe in this stock institutions, maybe they might not have shown any interest in this area. And why it is picked up, maybe there could be some order flow, there could be other analysis might be there, institutions, why it is picked up the orders from here and moved up. Or by the time prices came down, probably the demand and supply, they would have settled down. Settled down means maybe demand, supply would have been weakened. And probably the news and all might have been suppressed. See, generally news influence will be not for a long period. At some point of time it will exhaust. After that market again it changes its direction. Probably that could be the reasons. But if anybody would have planned a bear trap trade, still here also it would have been stopped out. That is what I am trying to say. And the first zone is we cannot plan a trade because it is already tested earlier. Prices went deep inside. This is the one definitely we would have planned a trade, but it is stopped out. And in LIC Housing Finance, it has given 4,100 rupees, which is 1.7% ROI. The risk is very high. Maybe those who can't accept this much risk, maximum allowed is 2%, but some people accept only 1%. Those people might have avoided this trade. Or maybe you might have used other techniques like using trailing stop, using position sizing, or you might have further reduced the width of the zone. Maybe you might have gone for type 3 proximal entry. Different techniques you might have used, but still your stop loss would have been hit. Maybe risk might have been minimized. This is the maximum risk. possible risk. That is what I am showing here. And there is one more stopped out trade, that is Shriram Finance. This is also a 75-minute zone. We have a rally 1, 2, 3, 4, 5, 6 base candles, and again a rally candle with a hidden gap and hidden body. This is what software identified. And when I fine-tuned in the 15 minutes time frame, identified two zones, rally base rally with the hidden body. So this is one zone, and this is another zone, rally, 3 base candles, and again a rally. These two 15-minute zones were identified. Now these 15 minutes we need to fine tune, but here I didn't find a proper 5-minute structure. Here I identified a good structure. Let me show you. So here the structure is not at all good. See the 5-minute candles within this zone. There are no base candles. That's why I know this zone will be violated easily. But this one, drop base rally, you can add the hidden body here. That way we can plan a trade, drop base rally here within this 5-minute zone. But today what happened, easily this zone is violated. It's opened and came down easily. See 1 minute time frame, if you see, you will get clarity. Here. This is the 9:15 candle, this is the 9:16 candle, easily. Why easily? So easily it is violated. Institutions might have cancelled their order flow. Because today morning that is what happened. Almost all the zones are violated in the morning session itself. After that market is settled. Here see prices came here in the 15-minute zone. It was settled for some time. Maybe intraday trades are executed, not high liquidity trades. See here we have a drop base rally. This is a 5-minute zone. But there is no, this is inside the 15-minute zone only. It gave intraday trades, not the 15 minutes targets, but intraday targets only. If you want to look for a 15 minutes target here, so there is no 15 minutes target is here, drop base. It is impossible to reach today. The 5 minutes level, they worked. Probably this could be the 5-minute zone. Because this is a rally based drop. Until here you need to, this could be the supply zone. Some intraday targets it achieved. After that this zone is also violated. So this is about Shriram. Anyway, we are not capturing these trades. I'm just telling you what happened today during the intraday about these stocks. Definitely some of you would have got 1:3 RR here. And the remaining two stocks which haven't executed are the supply zones, SBI Life, because prices didn't move up to that. And SBI Life is a daily zone. I already explained this zone, how to fine tune, everything I explained in one of the earlier videos. So you are already aware of this analysis because we already discussed it. I didn't remember which day, but one of the days already we discussed about it. Maybe the last HLQ zone analysis or one or two before that. Definitely recently only we discussed it. We have a ERC candle, 2 base candles and a drop candle. This is the leg-in, 2 base candles and a drop candle. And this we fine-tuned with 75 minutes time frame. Here we identified a 75-minute zone. We have a drop, 1, 2, 3 base candles and a drop follow-through candles. Inside again fine-tuned with 15-minute zone. So here drop, this is ERC candle, leg-in, base candle and a drop candle. From here again and again it is picking the orders. That way I assumed this could be a high liquidity 15-minute zone. And within this 5-minute zone we need to identify. In the recent price action within that area, we identified a 5-minute zone that is also picking the orders, rally, base, drop. See, it is picking the orders from here, coming down, again second time, again third time, again fourth time. So maybe I assumed this also could be a high liquidity zone, 5 minutes. Next time it may work or may not work, we don't know, we don't have the guarantee. Because several times it tested high liquidity zone. Maybe several times also it can test in the coming days, that possibility is there. Or next time it might be violated, that possibility is also there. So this was the analysis I explained you earlier. I don't know how many of you remembered and drawn these zones on your charts. Because I am observing some of the people are asking questions on the concept I already explained to you guys, which is not fair. That means you are not properly listening this analysis and you are not properly drawing these charts in your system. Why I am explaining? 2 reasons, educational purpose, and I want you people to draw these order flows so that next time again prices enter, you may get opportunities, trade opportunities in some of these stocks. If these zones are relevant at that time. And the last one is India Mart. This is 75 minutes high liquidity zone. This is the one earlier we discussed. This is the recent one. Yesterday our system identified this, our software. This is a drop candle. This one. See, you add the hidden body. This is going to be a drop candle. Drop, base, drop. This is the ERC candle. You need to add the hidden body. See how much red color body it will get. Remember, our software works in a dynamic way, not in a static way. And these are the base candles and a drop candle. This is how we identified this 75 minutes high liquidity zone. Then I have drawn the 15-minute zone inside. Here I am not comfortable with this structure. All these candles and all, see so many candles. 1, 2, 3, 4, 5, 6, 7, 8. Rally, even if we want to consider this is a drop also, 1, 2, 3, 4, 5, 6, 7. Moreover, the price structure is not at all convincing here. A lot of consolidation took place here. So all these reasons, I didn't focus on this. But here we have an excellent rally base drop. We have a rally base drop. This is the 15-minute zone I have drawn. So inside this 15-minute zone, again 5 minutes time frame, we have an excellent 5-minute zone. So this is a rally candle, leg candle and 2 base candles and a drop candle. And again another drop follow through candles. So definitely we can plan a trade in this 5-minute zone. But today prices did not enter into this because market opening itself it came down. After that prices moved but not good enough and again came down. So that way we didn't get a trade in this stock. So the only successful trade for today is the bear trap from Asian Paints. That is not only a bear trap, that is also a fine-tuned 5-minute zone from daily high liquidity zone of Asian Paints. See, do analysis carefully. You have to spend, when you are learning the concepts, you need to spend a lot of time. Sometimes you may feel like you understood everything. See, if the chart is very plain and it is very easy to draw, then you feel like, okay, you understand things easily. But sometimes you may see some special scenarios like what you have seen for Asian Paints. So such kind of stocks, you have to do a little careful analysis. But anyway, the happy thing is some people I am seeing in the comment section, you are discussing actively. That is the first step for our success. Those people who interact with others and keep on discussing the things, always their knowledge will be the better knowledge. That's why from the beginning I am telling you people, do group discussions. Because internet you can't interact with everybody until you know. Because internet, so many good things will be there, bad things will be there. Spammers will be there, scammers will be there. So because of all these reasons, finding the right people is difficult. So that's why I suggested previously, couple of months back, I suggested form as a groups with your friends. Encourage your friends, learn supply demand zone. Anyway, our course is available, free of cost. Tell them, this course is a lakhs of rupees worth. It is a free course. Encourage your friends to learn. Initially, you help them if they don't understand any of the concepts. Make sure their level of knowledge also will go up. Once they are ready, they are the asset for you people. Why they are asset? Because they will be in a position to participate the discussions with you. So do brainstorming sessions. That way you can interact with them. Now anyway, the other opportunity, some of the people actively participating in the trade activities. Now I am able to, at least I am encouraging you people to participate in the discussions. Until I create a Telegram group. Now we have Telegram channel. I will create Telegram group, but only restricted people only, limited people only, because I have to ensure I need time. Who are the real people? Who are the fake people? I need to understand. I need some time for that. So until that time, after that, at least slowly I will add people into the group. At the time you get a chance to interact with our other active members in our group. Hope this analysis will be helpful to you. At least I am expecting some learning you had from the ASIANPAINT stock. So let us all meet again in our next video. Thank you.